A very good morning, good afternoon, and good evening to all. Myself, Vaibhav. In today's session of Visual JForex, we will be continuing with the algorithm development using the indicator mid-price. This indicator gives us the mid-price using the closing high and the low for any underlying instrument, and we can utilize this information to devise a system which will trade with the trend as well as we can exploit the overbought and oversold scenario. I will be explaining to you how we are going to execute the trade first on the Visual JForex platform, which has been developed by the Dukascopy Bank SA. We had this setup ready in last two sessions. I had explained to you how you can define these conditions for the execution, and we had completed the buy side. So half of our work is already done. You will have to refer to earlier two sessions for this complete setup. I will give you a refresher of sort as we get started. The instrument subscription has been done. After that, the position amount was defined at 0. I have included these three mid-price blocks of the hourly candle period. The only difference between these three is this look back period. First is 1, second one is 24. So we are going to go back 24 hours in time to retrieve the value for the mid price and the current mid price value, which will be retrieved using the shift value of 0. And to look at the price volatility, we are also taking the help of these get historical candle blocks. These are information blocks. And to define certain variables, we have also taken the help of these calculation expressions. Okay, and on the lower side, we have these buy side of the equation ready. Today it's the turn of the sell side. We will see how we can go for a optimum combination to look for the shorting opportunities, and our instrument of choice is Euro USD. So let us now head to the JForex platform. This is the Euro USD chart with the hourly time frame. And the logic is quite simple. We want to be trading with the trend. So for that, if we are looking to go for any short sell trade, we will be looking to compare its mid price value. You can take the current mid price value or the mid price value 1 hour back and compare it to the mid price value 24 hours back. So we have the data for 24 hours. And if we see the current mid price value is lower compared to the mid price value 24 hours back, that means the underlying momentum is bearish and this might be the opportunity to go short. But at the same time, we don't really want to get involved in a scenario where there has been significant move already in the underlying instrument, and there might not be any further move on the downside. So as to avoid that kind of order placement, we are going to rely on a regression to the mean principle. So we will be placing the order when we have deviation from the mid price on the higher side. So that ensures we have retracement on our side. Retracement in the underlying instrument has already happened, and if we are counting on the continuation of bearish momentum, this might be the time. So we will add 30 pips. And why I have chosen 30 pips, it's simply because on most days the ATR is around 60 pips for the Euro USD, and we are taking half of that and I'm adding that to the mid price to arrive at the optimum entry point. There is not a something like cast in stone. You can change the value. If you want to keep it at 20 pips, you can do that as well. You simply have to change the value of the variable. It's quite simple. So here I have taken this value of 30 pips. We will add it to the mid price, and that will be the point of entry on the higher side. When we have the last hourly candle close above 30 pips from the mid price, that will signify that there has been divergence, and we will not be placing the order at the market price. Rather than that, this time around we are using the stop order system. So the order on the sell side will be placed below the current market price, We'll be using a sell stop by bid or by ask. You can take any of the option, and we will be placing 5 pips below the current market price. So something like this will materialize. Okay, so the logic is now, I hope, clear to you. So we head to the Visual JForex platform again, and two more calculations will need to be done. First is defining of the value 30 pips above the mid price. So for that I have to add this DDF variable which has the value of 30 pips to the mid price, and then we define the sale execution price SEP. So for this I need to add two more calculation expressions here. We had already defined the order validity of 4 hours in the last session, so our job is done to that extent. This TPP carries the start value of 30. You can check it from the user's variable. You will have to define it yourself. 30 multiplied by the default instrument pip size. We take current mid price, or you can take even last hour's mid price. It is not going to take much difference. So I take this mid price 10 and add the result of the calculation here, and we use Excel convention. So this is going to be A1 plus A2, and I will name it SC, cell condition. Okay, so this is done. Now comes the question of defining the sale execution price, and for that we have to deduct the 5 pips from last tick bid or tick ask. So I take last tick bid, and from it 5 pips will be deducted. We had defined 5 pips in this calculation. Is going to be A1 minus A2 sale execution price. So we have now these two newly created variables which will help us in defining the conditions for the execution of the trade. Now let us bring in the logical blocks. We are going to make the formation symmetric. We had utilized 4 if blocks, if else statements last time around. So the equal number of if else statements will need to be used this time around as well. And after that, the trade command block. So I add these 4 and one pending opener. Okay. Now I will have to take mid price 15, which is the current mid price output value, and compare it to the mid price 14. And since we also want to make sure that we are trading with the trend, here the first input needs to be lower compared to the second input. Okay, after that the last hourly candle close will need to be higher compared to this sell condition output. So I have to take candle 16 candle close. You have to go to auto created variables, and here you will find it listed below these options. So the candle close will need to be greater compared to the 30 pips above the mid price. That means first input greater than second input. And with this, the conditions are in place, and as soon as the price starts to drop below the closing value of the last hour, we will look to initiate the trade. So for that, we compare candle 16 candle close with the closing values of these two 10-second blocks, 10-second candles, candle 19 and candle 20 respectively, which have this look back period of 1 and 2. So again, I have to take closing value of the candle 16. All right, and compare it to candle 19 candle close and candle 20 candle close. So this formation is now coming towards finality, final completion. Here the first input needs to be lower than the second input, whereas candle 20 candle close should have been higher. So we have to define first input greater than second input in second if else statement. And after that comes the trade command block sell. As I said, this is going to be a sell stop order. So we have to find this option. And prior to defining of the input parameters, I will arrange this on the lower side. Now coming to the input parameters, we had defined this execution price. So this is going to be assigned here. Default instrument remains as it is. Trade amount I will change to 0.1 million. Slippage of 2 pips is good enough. And stop loss take profit combination will be same as we had defined for the buy side. Since we are working with the hourly time frame, I think a combination of 15 pips as the stop loss and 30 pips as take profit is good enough. So we are not doing any changes in this ratio. We will have the SL and TP defined in 1:2. And order validity, we had defined it last time around 4 hours. So I simply assign this variable to the good till time. And with this, the system is ready to work now, I guess. Let me color code it. And with this you can see that the iteration flow is going through till the very end. That means it is logically as well as it is sound from the execution point of view. And once you complete it, I would recommend that you test it on the historical data on the JForex platform, and then only you will come to realize whether it is good enough or not, the efficacy of these algorithm. So that's it from my side for today's session. If you have any query or any idea to share, you can write to me in the feedback section. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can join us there. Thank you all for joining in. See you next time. Till then, goodbye.